Okay.
Yeah.
Okay, perfect. Right, welcome everybody on a Wednesday afternoon. A lovely middle of the week feeling, I'm sure. And just to show it's getting slightly back to normal, it's now raining here in the UK, so that makes it feel like normal. I'm going to go through the Cybercrime report from Lexis Nexis Solutions. As Sarah mentioned, it's a report that we do. We used to do every quarter, but due to the amount of volume and insight and research we have to do is now every half of the year. I'm going to cover the latest information that covers the back half of 2020, which of course where lots of impacts were happening in the world in terms of COVID, etc. So I'll take you through the findings in the report through these next few minutes. Okay. What I'm going to cover, I'm going to go through the global risks. So I'll give you a global picture, focusing on aspects of parts of the customer journey and how some of the kind of fraud situations are happening and the scenarios that there are. Look at some regional trends as well, and look at kind of how the different regions compare, and also then look at industry with a view at near the end of what we actually see. From the kind of the pandemic year as well, in terms of what we've seen in trends there. So that's kind of the kind of stages I'm going to look at in terms of overview and insight and information. Just to reflect on what am I talking about? What data are we looking at? So within LexisNexis, we have a digital identity network where we analyze transactions from multiple industries. So from the finance industry, payments, personal banking, corporate banking, media, telecoms, travel, insurance, anything that's happening kind of digitally, any industry that's happening digitally, there's types of transactions going through our network. And when those transactions go through our network, the organizations using the network are flagging those as high risk, low risk in terms of transactions, and give fraud indicators, positive, negative fraud indicators on some of those that are on the attacks that they see. So we can utilize the digital identity intelligence that we have to analyze the transactions, analyze high risk, and therefore start to look at the lower level in terms of what is happening. So the second half of the year covers about 24 billion transactions, but I'll also give a quick summary of what's happening over the past year in the whole of 2020 as well. And we can look at where those transactions occur, how they occur, and how they interrelate with each other as well across the network. So these are the kind of things we're going to look at within the landscape of the Cybercrime report. To start with, give you a kind of global view, and this global view is for the whole year of 2020. So in whole 2020, we saw analyzed 47 billion transactions across the network, which was an increase of a third. Now, a lot of that increase is due to the massive shift that happened with the pandemic situation, physical retail stores shutting down, physical operations shutting down, and people moving online. But you've also got to realize even in that growth, you've got some industries that have not been transacting at all. So hospitality aspects, you've got industries in travel as well, where there's not been as many interactions. So they would have dropped in terms of volume, but overall, they're still made up for by the kind of general growth in digital transactions. What we saw in terms of the attack profiles that were in there, in terms of human-initiated attacks across the whole network globally, actually dropped in 2020. And this is kind of explainable by the fact that situations of, again, in certain pieces, certain services were actually shut down and not able to transact. And therefore, we didn't see those kind of human-initiated attacks in those marketplaces. And also, the situation of where, fraudsters and criminal entities, whatever we want to call them, were also impacted by the restrictions that impacted everybody else. Where we were all stuck at home, they were all stuck at home. The one thing as a fraudster, you don't want to be stuck at, if you're initiating a cyber attack, you do not necessarily want to do that from a static location. And the fact they couldn't move around or use shared Wi-Fi points or hotspots like they would do in different countries, different touch points, different areas, meant that they reduced their actual, individual human-initiated attacks. But what we did see was a reverse increase in bot and automated attacks. So they started to shift their pattern from human-initiated to actually automated attacks to target various kind of scams and schemes and operations where they could purely gain kind of credential and information data from individuals and do high and fast touch attacks at scale as well. We saw across the whole year, the most prevalent attack vector was still related to identity and identity spoofing. We know that in telecoms, subscription and account-based fraud scenarios have been kind of #1 issues for many years. That's the same in terms of digital. That identity spoofing, the identity attacks, seem to be the prevalent dominant factor over 2020. Just a couple of other indicators that are in there in the stats is also the percentage of these attacks that are now starting to come from mobile devices and on the mobile platforms rather than traditional web desktop type platforms. So we see where that's now going over the 50% mark and growing year upon year, just slowly growing, more and more attacks coming from mobile. So as an industry in the telco side, the capability we're giving to the consumers is also adding to the capability of the fraudsters initiating these types of attacks. Going through, looking at some, individual patterns, when we focus on the second half of the year, as I say, that was 24 billion, as I say, a third growth. In terms of channel, again, growth in the mobile space. But what we did see in the second half of the year, when we look at things like device and digital identity, millions of brand new digital entities that were coming onto the network. And what you need to be able to do is be able to distinguish which of those are actually genuine versus normally new digital identities potentially are a high risk of fraud because they're synthetics and synthetic type attacks. But because everybody got shifted to having to use digital and physical close downs in some locations around the world, like we've had in the UK, for example, and just started to come out of for the third time now, it means that everything had to go digital. And therefore, even consumers in the banking space and financial space, where they had really resisted going to digital because they still like to go into their bank retail location, the bank store to transact, they had to move to digital platforms in order to manage their money. And that was the only way to interoperate. So we started to see lots of new to digital customers coming on board. But that means that actually there's more targets for the fraudsters, particularly in scams and mule operations, where they're targeting these new to digital individuals for their scams and schemes and phishing and smishing, etc., because they are targets that can be easily persuaded and not used to transacting digitally. When we look at actually percentage of attacks that are happening per day, you can see across the whole global network, the actual average hit rate is around kind of 1% of all transactions are attempted fraud. And then we see certain spikes and attacks that happen at different periods in different locations. What we highlight here is a few examples of where we see spikes of activity happening over 2020. And you can see in this situation, there was a couple of big attacks at the start of the year in 2020, before the kind of COVID situation kind of kicked in, as the and they were targeting different locations. So we had fake accounts being created in the US and Hong Kong, attacking finance payment, a payment gateway being targeted in France. We saw personal finance attack, our good old friend Nigeria doing account takeover attacks against personal finance in the kind of March and April period. And then we start to see, again, little other kind of examples. We see attacks in the Netherlands, other attacks in the US, and where we're seeing these attacks come readily and steadily across the year, but can be absolutely at scale and very, very targeted, but also attacking multiple locations and multiple countries. And I'll go through a couple of examples of those and how they interact that we were able to see within the data. In terms of where the attacks are being initiated from, if we look at like human initiated attacks, predominant, there's a mix of mature locations, should we say, US, UK, Canada, for example, but also kind of up and coming growth economies as well. So it's interesting to see kind of Brazil in there at number 3, for example, Saudi Arabia becoming an attacking target, an origination target. But then strange ones like Guatemala and Bahrain, Zimbabwe, little locations are actually starting to initiate aspects of attack, and where large growth in attacks were kind of originating from. But this is kind of interesting because it kind of shows how fraud initiation, from human initiated attacks, is kind of a global kind of situation, and you see how different countries and different operations are kind of coming through. And as we look at kind of the other side on the automated attacks, many of them across the same kind of countries sitting there, but little new ones coming there, little kind of interesting things of automated attacks coming out of Nigeria, coming out of Isle of Man or the United Arab Emirates as well. Australia on there in the top 10 coming in as well as an initiation point, which is kind of interesting considering the situation of the COVID pandemic and lockdown, because Australia did lock down its borders fully as an operation, so you can't fly in or fly out of Australia, apart from in very, very limited circumstances. And even then, you'd go into a quarantine in a government-organised hotel. So the increase in automation from that location is kind of interesting because people are, the operators of these kind of attacks are locked down in those locations and have to initiate kind of that kind of situation from that location. When we look at when we start to look at some of the fraud attacks, we can start to look at, and there's a couple of examples coming up where I'll show diagrams, and there's links in the diagrams, where we start to look at things that are actually linked together. So we can look at the device that's utilized. And when I'm talking about the device that's utilized, I'm not talking in the telecom sense of the IMEI number. We're talking about the device. That device could be a phone, it could be an iPad, it could be a PC, desktop, or another piece of equipment that can be kind of utilizing a browser app or a browser initiation or a mobile browser capability. So we can look at devices, and what devices being utilized, email addresses as well, because they're kind of commonalities now that we all utilize across the world, particularly for verifying kind of log-on activity and sign-up activity. Phone numbers, obviously interesting to us from a telecoms point of view of what links are going on there in terms of the phone being a point of both compromise and initiation of attacks. So I'll go through a couple of examples where we start to bring these kind of links together, and we could analyze this within the data in some of these network fraud scenarios. So the first one I'm going to show you is, I picked this one out because it's in the North America. Obviously, we have a lot of relevance there in that marketplace, and you can see here kind of the vast interactions, the number of organizations involved in one correlated fraud organization who are initiating attacks against different organizations for different purposes. So they're attacking gateways, personal finance aspects, government information, lending information, digital wallets, banks, identity verification tools and step roles, payroll information. So across the kind of organizations that are highlighting these fraud attacks, when we linked in these fraud attacks, we highlighted 1.5 million of fraud and another 8 to 9 million of related potential fraud that kind of have been highlighted to these organizations. And there are links in there there were phone numbers of the links, there were email address links, there were device links and correlations, and they may do credential testing at one location, utilize those credentials to go and then initiate money transfers to another location, set up mule accounts in another operation, pass that money through to then another operation. So it's very, very organized in the North American situation, cross-border, both in the US and Canada, cross situation, utilizing multiple services. So if you can imagine, if you're only looking at your own data and your own information, you only have a very, very limited insight into actually what is going on and the organization behind it in terms of initiating these attacks. And this is what we see across our digital identity network in the cybercrime report. Those little peaks that were in that graph I showed earlier are each these types of attacks where we have these attacks coming through, and they're initiating orchestrated operations across industries and across services and using different capabilities. And we see the same, this is an example from EMEA as well, kind of my region. So we have, again, over 2,000 different linked events in the initial attack, and then another 3,000 plus events linked, again, utilizing different device links, email information, and telephone numbers are being compromised or linked to the activity as well. In this case, again, multiple types of organizations. So we had payment gateways utilizing loyalty programs to gain information, marketplaces and e-commerce sites and travel information as well. And you see, in France, in Germany, in the Netherlands, in Spain, in Latvia, in Italy, United and UAE. So, again, if you're looking at this from one aspect, one piece of information, you may only see, the Spanish kind of marketplace interactions. Do you realize that is actually then attacking a e-commerce retailer in France, and they're actually doing credential testing on a loyalty program in the UAE and targeting also other credential testing against a loyalty program in France. Those of us who have been traveling not recently, but previously, we're part of these loyalty programs in the travel space. Have we looked at our own, air mileage programs and, have we logged on them in the past year and a half? Possibly not. Particularly international travelers. I haven't touched international travel for a year and a half now. I'm desperate to do so, but in that situation, it means, if people are accessing my account, verifying credential testing, logging in to check the logon details, seeing what points, things I've got stuck to, can those points be moved? If I've got millions of points in a travel program that's just sitting there not being utilized, can they be shifted across and then turned into cash elsewhere, cashed out in a payment mechanism, etc.? So doing these kind of operations while that industry is at a standstill is a beautiful target for a fraud operation. Start there and then see where I can move the money from and to, and how I can realize the operation. Another look at a deep dive here, we're going to look at how looking at email addresses, using breached email addresses, go across different organizations. So in this case, the fraud initiation attack was identity testing using stolen email addresses. Again, we've had I know I've mentioned travel loyalty program. We had another data breach in those just a couple of months ago, and we've all had the announcements saying you might want to change your password because they obtained what they say is non-significant information, i.e. email and password, but how many general consumers use the same email and password across multiple of their services? So in this case, they're using email and password to initiate testing, targeting gaming and gambling operators, a retailer and an airline, using bot attacks, so an automated attacks to pass through username and password situation. About 13,000 account takeover attempts, in the airline, about 2.5 account takeover attempts in gaming and gambling, and similar in the retail space. So from that perspective, bringing across the email characteristics and linking those together enable us to link the information together. And we can see here again, UK, France, Middle East, across Denmark, Austria, Spain, France, Germany, interactions and inter-retailers where they've used the stolen email addresses to initiate verification checks. So maybe doing kind of verification, is that email and username still utilized in combination on other websites, finding those websites where they are. Once in that website, then initiating attacks against that, whether that be purchases or money kind of cash out situations, in gaming and gambling, maybe taking advantage of any kind of cash out capabilities for money that's in the account, in the gambling account. It may be taking advantage of bonus offers and things like that, initiating kind of, the free, free $10 of bets or $20 of bets that they may have, see if they can do some kind of gambling on the account and then initiate a cash out situation as well. Or see if they can access the credit card information or the personal information on one of these other services and then use that in the retail space. So they have these interactions where we can trace not just device, not just phone number, email address, all these different factors together across the identity network to show these circumstances of fraud situations when they're happening. So when we talk about cyber attacks, we're not just talking about an individual attack against an individual organization. we're talking about mass credential testing, mass revenue generation, cash out situations across multiple industries. And that multiple industry link is important to us. From a telecoms point of view, we have various points of kind of compromise where we can be inadvertently facilitating this kind of capability as well. Particularly for those that are in the mobile space, because mobile is often used as an authenticator now for many of these transactions, whether it's by SMS or a one-time password or a sign-on capability via an app, etc. So looking across the customer journey, so when we break down the analysis that we have in, we kind of break it into three main risk areas. So new account creations, so creating a new account or in a retail factor, that would be a new account doing a new purchase, process. We have logons. Now, logons could be just logging onto your service. It could be accessing self-service, account management services. In TV media environment, it could be logging on to watch your latest TV, IPTV content and seeing what you're going to download and watch tomorrow. In many telcos now, you may use the same logon ID and have a centralized ID, which you use for your account services, account management, and your mobile device log on to your TV services or your broadband services, etc. So logons kind of cover all those kind of different aspects. And then payments. And obviously payment is the kind of endpoint of many transactions in the e-commerce space, in the retail space, but also kind of payments happening in the banking space where it's getting cash transfer or mobile transfer, mobile payments, and those kind of things that happen. So we break down, there's different volumes. I won't go through the volumes are there on the screen. One of the most important things, one of the things that kind of highlighted is the biggest growth area that we saw the highest rate of attacks was actually in the logon space, the details changes. So seeing changes of details, the growth in that space in 2020, second half of 2020 was huge. And this again is looking at targeting potentially those new to digital customers or inexperienced digital customers, or those customers who are not using digital services at the current point in time because that industry is shut down, like the travel space. Go in there, change their contact details, change the phone number details, etc. In the finance space, it may be targeting the telco to do a SIM swap or a SIM change or a port, or a contact detail change kind of situation. That was the growth area across this kind of customer journey space. Just to go a little bit on a kind of regional perspective, on a general summary, we look globally in terms of Asia Pacific. Asia Pacific and LATAM, should I say, are kind of highest attack rates at the moment, and I'll show this shortly in terms of kind of the volumes that we see. But we saw in APAC particularly large rises in bot volumes, and again that's pretty explainable probably by some aspects of COVID, because with the COVID situation, the APAC region, they've had SARS and MERS and other pandemic situations where they're getting used to shutting down their kind of country locations. And so there was, they were some of the first areas to lock down and shut down, their borders and shut down their kind of capabilities. So that pushed the fraud operations to go automated. EMEA, we have, we're leading the way in mobile growth and mobile utilization. I know, and particularly in the finance space, mobile and online banking is the growth area. I know the US is a little bit behind us in that state, and still a lot of things still happen and transact in the branch, but that's starting to change and starting to move across. Across EMEA, attack rates were lower generally in the back end of 2020, but again, a lot of the European operations shut down totally, and 2 or 3 times. And as we say, ourselves in the UK don't have as many freedoms as you do in the US and other regions, and that's still the same. And actually, the COVID problem is still growing in parts of EMEA at the moment. So just going to look at that when we look at the identity index by region and split it out. Now, I showed the global graph, and you showed the average was around kind of that 1% level. And you can see both EMEA and the US, the bottom two lines there, the red and the dark blue lines for EMEA and the US, North America regions, average out usually about 1% of transactions as potential risk. When you take that across all transactions, it's still a huge amount of transactions that are actually at risk. And in a second, I'll break it down by different use case. But APAC and LATAM are particularly high. And you can see LATAM, they're averaging out around 5%. And that's a huge percentage of all transactions that are going on that are potentially at risk or high risk transactions going across the digital sphere. So it's something to kind of keep an eye on. Just a little kind of a brief view in terms of where the attacks are coming from in EMEA. Are actually top attackers, as opposed to last year where we would see kind of attacks from the US and Canada, for example. Top 5 now was actually regionalized. We're being attacked from within their own region. Again, potentially a bit of COVID impact on that situation. Actual target locations, when you look at the locations coming out of EMEA, though, who we're targeting, they're targeting established digital marketplaces. In LATAM, again, growth in terms of the situation there. In LATAM, the top 5 attackers, you can see kind of difference, but Brazil is a kind of crucial one there, is where it's kind of high growth, high aspects in Brazil. But a couple of interesting ones, Colombia, Peru, kind of coming in there, kind of may not kind of see. In terms of North America, yes, of course, North America, 2 countries classified, so yeah, you're both the top attackers. But in terms of attack destinations, again, targeting those established markets, and that interesting interrelation with Brazil, with Latin America there as well, where that kind of correlation kind of comes through. Just to go and have a look at a little bit more on an industry level. And so what I'm going to break down 3, an overall kind of industry, and then kind of different industry breakdowns. And we can see a split here in terms of mobile desktop penetration, in terms of overall attack rates. As I say, they averaged out around kind of 1% on offer. But you look at media and the telecoms, where do we come in telecoms? Well, we could put ourselves probably between e-commerce and media, because we're doing both sorts of services. We're offering TV online services, content services. We're offering kind of broadband services, but we're also offering kind of retail sales, e-commerce, online store sales as well. So we have a kind of mix of operations. So we kind of mix across those 2 spaces, and bear that in mind when I go through the next stats. But you can see that media, just their attack profile generally, is a targeted location. And that's a couple of different purposes, often utilized to verify details, and often utilized to help initiate setting up what the fraudsters conceive as a digital identity for these identity spoofing attacks. Because if they can set up a media profile, utilizing a phone or an email address to set up a media profile, interact with that media profile using device, they kind of think they can get round the kind of digital identification by saying, well, we've got an established device using a profile online that is trusted in its media sense, but it's not yet trusted in the financial sense. So when they start then synthetically adding data to that account to set up a financial account, service account, they're thinking that they may get round some of those kind of checks and balances that are in place. But what I want to go do is go down to a lower level here and break it down by actual use case, because this is where we get kind of interesting breakdowns and interesting kind of hit rates. So I'm going to focus on the left-hand side of the screen, new account creations. As I mentioned before, general abuse level in new account creations is 1 in 10 across all services, all industries. So in digital space, across whatever industry you're in, what we see is 1 in 10 new account openings is attempted fraud. That is not something that of a level that we ever got in the physical space. In the physical space, physical retail sports space, you would not expect kind of 1 in 10 transaction level to be attempted fraud, in store. So moving to digital, the increase in risk just generally is huge. In the media e-com space, I'll just highlight there, you can see the percentage rates in the media and e-com space in that kind of new account creation vertical, much, much higher. 1 in 5 in media, depending on the kind of how they're coming in. If they're coming in via desktop platform, it's 1 in 5. It's kind of a 1 in kind of 6, 7 space. Generally, overall, are attempted fraud, attempted false identities, spoofing identities coming into that media space, creating new accounts. And that it's okay for e-com on all kinds of platforms. It's around kind of 1 in 20. But you can see there, Dan, if you're moving from your physical to digital transformation programs, selling stuff online, particularly in the mobile space or device space or the TV service space, and you're selling devices that can be resold and reutilized, 1 in 20 is bad enough. But between 1 in 10, 1 in 20, depending on the channel, depending on how you validate the customers online, what if they're coming in via desktop or mobile, etc. That's a huge kind of interaction. Now, again, my experience of being in the industry is, it wasn't as high profile a level of attack as it was for physical retail, for example, mainly because pre-COVID, maybe 80-90% of our sales transactions maybe still have been done by physical retail or via call centers and that kind of scenario. Now we're moving to digital. If we've got these attack rates moving into digital space, that's a huge risk we should be looking to address, because the potential for that, if we get to the scale of switching over, we start to get, say, 80% digital and 20% retail, that's a big shift, and that's a big number that we're going to be dealing with from a new account creation perspective. Logons, as I say, logons generally is a lower percentage in terms of the overall attack rates. You get around the 1% of logons. But if you think of logons generally, if we're looking at, an average user might log on to your services 10, 15 times a day if they're accessing the TV services and their own account services, their email, etc. Depends what kind of services you provide to them. They could be transacting several times a day or several times a week via logon capabilities. As opposed to new account creations, that's 1 in a while kind of scenario. So even though it's only 1% in terms of volume wise, is still a huge volume of interactions and transactions that are going on. Here we see, logons can be particularly targeted for credential testing. And interestingly, again, looking at the mobile space for media in logons, how the mobile apps themselves are being targeted and utilized to set up false credentials. So they may have downloaded the app onto a device, but what they may be doing is trying to spoof the device to make it look like a different device identifier with a new username and password to do their credential test, to do those automated tests. It's easier for them to do their automated bot attacks against a mobile app platform. So therefore, that growth area is particularly high. So, to go into your own mobile app is not necessarily more secure. And we see that when we move across to payments and the payment kind of use case space. So within payments, we see actually mobile browser equivalent to desktop in financial services are where they're being targeted attack. And that's where they're doing the kind of money transfers. And this may be where individuals are falling for scams and schemes, remote access software takeover, being talked through situations, following kind of social media links and passing details on they shouldn't be. And we see those kind of compromises going on. And also where it links in the telco space, and where we see compromises of the mobile account for the SMS verification, because many kind of financial services, payment facilities will utilize SMS OTP as a verification tool, or call to the phone number as a verification tool. And if that's happened and the SIM swap has occurred, that kind of compromise is a higher kind of attack profile, a higher success rate for the fraudster. So we see those kind of growth areas there. There's a lot of data on that slide, but hopefully kind of took you through it. In terms of looking at the consumer itself and looking, in the pandemic itself, this is one of the interesting stats that came out of the analysis for the back end of 2020. Because as we say, we saw lots of new to digital customers, particularly, And the expectation is it's the elderly and the older age groups who are the most vulnerable and the most likely to lose out and the most likely to be attacked. And that does stand true for the actual losses by age group. And we see the highest average fraud loss by customer, so the right-hand side of the graph here. The higher age groups are losing the most money to these kind of cyber manipulations that are going on, and these digital manipulations that are going on, mainly because they have the funds. They've built up their funds, they've built up their credit profile, they've built up their pension pots. So when they fall for a scam, they can actually lose a great deal of revenue. The interesting thing though is to the left-hand side of this chart is actually the age groups that have been attacked. Most interestingly, the analysis from the back end of 2020 showed that actually the under 25s were the most targeted age group for fraud attacks. Now, we kind of think of younger people being more savvy with the digital technologies. They know how to use their devices and apps that we don't, I don't even understand. They don't, the older generation don't even understand. So we think they're actually pretty savvy. But the one thing where probably they're not quite as savvy is understanding the value of the data they may give out over social media or via these kind of social interaction, digital interactions and capabilities. So therefore, they can be targeted by kind of Facebook scams and social media scams to target them in volume, because they don't realize that passing on their personal details could actually compromise them in the long term. They're often targets for mule accounts as well, where it's kind of a get rich quick scheme. This is it's too good to be true, kind of sales opportunity, etc. And they'll go and jump into those kind of things because they've seen the advert on Facebook and link through Facebook or Instagram or whatever else it may be. So we see that actually that younger age group, although more digitally interactive, can be more naive about their credit standpoint. So therefore, fraudsters will target them for their details, for mule accounts, for compromises in volume, because they can get lots of quick wins. It may be a lower financial win in terms of scale of kind of per fraud, but actually they can do it at high volume and get a high hit return as well. Whereas the older generation, you need to put in more work actually to organize that scam, talk them through, take them through the operation, etc. So therefore, there's a kind of bigger benefit, but there's more work in that kind of involved. And this is where we see the correlation of bot attacks and automated attacks as well happening against those kind of younger age groups via those kind of digital social channels. Just other things across the COVID pandemic, we did see little kind of tweaks in data sets as well. So as I mentioned, general growth overall in digital interactions, but we saw, of course, less logon activity from different locations. So people like myself who were constantly traveling and interacting, my change in my kind of profile, my behavior profile, must have been significant from a banking and kind of credit perspective. If you think the banks and credit card companies probably tracked and understood what my profile was, that significantly changed within a very short period of time. Where I was traveling internationally all the time in lots of different locations, suddenly to going nowhere and doing maybe lots and lots of online purchases that may have looked like suspect. So, organizations that use modeling would have had to change and shift their profile and behavioral profile and understanding of users as those patterns changed. Also, it moved people to new devices, new digital identities. So as I said earlier, there were new devices coming on board, new information coming on board, new to digital customers. And in previous iterations of models, we may have treated them as high risk. So you don't want to treat those as high risk because the expectation is moving, because of COVID, everybody had to move digital where they'd never been digital before, never had a device before, never logged on before. And therefore their whole patterns again were all new. And it's how do you kind of assess the wheat from the chaff in terms of the fraud situation. And fraudsters was trying to take advantage of that kind of situation by putting their kind of false transactions within that kind of uptake and growth. Overall, there was a fall in fraud attack rates across the COVID period. Now, you've got to bear in mind, as I say, there were significant industries that just suddenly stopped and ceased interactions. So that meant that fraud rates would drop, but actually, because the fraudsters could not kind of interact, or would be, blindingly obvious if they were interacting and the general consumer wasn't. So therefore, fraudsters had to change their patterns. But what we did see is actually a shift to a lot more credential testing and credential building and verification. So we have the expectation of, we will see those credentials that have been compromised starting to be utilized and manipulated for fraud attacks within 2021. In terms of the fraud types and situations, so as I mentioned at the start, identity proofing was the spoofing, was the most prevalent, and was kind of seen across 5% of all kind of global fraud events that we highlighted. But device spoofing was also up there as well. So they're getting aware that people are looking at kind of basic information around device. So they were trying to manipulate that kind of portfolio. As I say, what they may do is set up an email account and a phone number, or a phone number with a link to a media account, start doing media transactions, but then initiate a build-up of other material across the financial space to build up what they would see as a synthetic digital identity, to try and manipulate the process that the device has been used before in an industry. Excuse me. In terms of attack growth, COVID had that impact in terms of shifting people to automation, and as I say, particularly utilizing bots to credential test and verify individuals, and do some of the social scams and simple scams that they could do via social media channels. Media, of which obviously telco ourselves kind of fall into, remains, it was the target industry within 2020. Highest overall attack rates across the board, whether that's credential testing, whether that's content, whether that's access, but utilized as an initiator to an attack, as well as the attack themselves. So us, the telco, we may not see our fraud levels kind of significantly grow because of that, but what we see is we are the point of compromise that is then utilized within financial services and other industries. And that is a concern of how we're seen by our customers, because if we're seen as the point of data compromise or the point of manipulation, customer satisfaction then becomes a problem, and customer trust in our tools and capabilities becomes a problem. Of course, within the COVID year, there were lots of different finance packages that were being launched across the globe. In the UK, we had various loan schemes for small to medium enterprises and big businesses. And we saw massive increases in some of these identity spoofing, actually setting up false organizations, false companies, or taking over account, business accounts in order to target these kind of financial schemes. And because they were quickly set up, and of course, set up online to be online capable, they were a big focus of attack within the 2020 period. But what we're seeing, as I say, is kind of we saw early indications of the financial squeeze as well of the COVID situation, where individuals were being squeezed. And we started to see a great deal of growth in first-party fraud. So that's where the individual themselves is claiming fraud against their account when it's them that's done the transactions, because they know they can kind of claim fraud and not have to pay, because they've got the financial squeeze on themselves. So they were looking to do that across different organizations, but particularly in the e-commerce online shopping space. So, so there's my kind of overview and kind of general overview of what we saw. So we saw that actually, over the whole year, transactions grew, of course, because we shifted to digital, but human initiated, that personal touch was affected by the pandemic, because the fraudsters couldn't quite operate in their normal way, but they quickly shifted to automated types of attacks, higher volume, higher coverage, maybe lower return for them, but can be operated at scale and hidden in the scale of increase in digital transactions that people were having to deal with, and particularly when they're having to deal with new to digital. How do you identify new to digital to actually just brand new fraudster synthetic created accounts? New account creations, still that high attack rate, that 1 in 10 transactions, which is, should be concerned for any of you out there that are transacting digitally. If that, that is the average rate we're seeing across all industries. And as I mentioned, media, particularly in telco, online e-commerce, are ones that are being targeted because we can give them an immediate return on investment for their kind of fraud operation. So we need to be getting our strategies in line for what we can do in the online space. Media as well, log on activity, credential testing, validation, service abuse attacks, etc. We are a kind of prime industry in 2020, and building for attacks in 2021. As I say, that validate those data compromises that happened in 2020 as well, test them through media, and then see what we can compromise in 2021 in the financial space. LATAM was kind of one of the growth markets, but the COVID impact did impact attack rates across all regions because of the limitations of what both the fraudsters can do and some industries that were shut down that were often utilized as target industries. And as I say, that kind of at-risk age groups, under 25 most targeted for fraud, the over 75s largest loss. They're the big news stories in terms of what we get in the media space. But actually, the younger generation need advising and educating as much as anybody of the importance of their data, importance of how they transact online, the security of that, and the importance of their kind of credit profile going forward as they get older. So there we go. There's my kind of summary, and I think I've got time for kind of any questions should you have any.